Welcome back everyone to another quick stock analysis, and today I'm going to be looking at Corsair Gaming. Corsair Gaming is a gaming company. It makes hardware and other accessories for gaming products. Did very, very well in 2020. In 2020, everyone was thinking, right, everyone's going to be stuck at home. They're going to be buying lots of new little accessories for their gaming systems, and generally everyone's just going to lock themselves away indoors. And I did take a look at this in 2020. I think it was one of my quick stock analysis live videos. It might have been, or it might have been a proper video anyway. But I can already tell you that back then I knew this company was going to be a terrible investment at that time. And now that it's coming to the end of 2021 and lockdowns are over and there's a lot of recovery stuff going on, you might start seeing me starting to look at a few of these crazy growth stocks that went mental in 2020. This is because in companies like this, let me just check the news. I bet there's news like that they've destroyed earnings or something like that. Okay, so they've cut their guidance by the looks of things from 1.8 billion to 1.9 billion. Yeah, okay, so this was really obvious that they were going to do this. Corsair had a really, really good year in 2020 and probably early 2021. Even the management would have thought this, and they would have brought revenues forward. They would have noticed that they were going to get a big spike in revenue. And particularly with the stock price goes absolutely mental, and we have this what's called reversion to the mean. We'll find that these companies will get too excited to the upside, and then when guidance gets pulled back and people start cooling off on this, it'll start reverting back to its earnings. And this is why coming up now, you'll start to see me looking at a couple of these growth type companies. And trust me, even the biggest ones will do it. It's just the quieter ones that are doing it right now. But this big drop is now time to look at whether Corsair is worth buying or not. It's exactly the same as we looked at with ASOS the other week. And it doesn't look like that it's cut its guidance by that much, only about $1 million. And according to this Motley Fool article that I've just found, it does show that the growth is still going to be there. It's just going to be a little bit less than we thought. So looking at the June 2020 quarter, I think it's actually not going to give its earnings until next month, maybe something like that. But obviously it's given lower guidance a month in hand. That's what happens to a lot of these companies. Current ratio is 1.48. Not the greatest we've ever seen, but it's okay. Right, we have 6 years of data. This is the reason why we look at these companies now, because we've got a lot of data to go off. We can see that this company is growing its revenue. 2020 was probably a bit of a weird year. Let's try and flick it to quarterly just to see. And yeah, you are seeing lower revenues going on into the latest quarters of 2020. We still haven't got Q4 of we still haven't got Q2 of 2021, Q3 of 2021, but it does look like this could be lower than 2020. However, if you take 2020 out as a weird year and you take the idea that people would have brought things in 2020 that they may have put off till 2021, and now we've got a kind of gap year because we've had to bring all that revenue forward, we still might have a business in the far future that will still grow very, very well. Looking at EBITDA, look at what... Ooh, that's a bit more than I thought it would be. Okay, so 2029, 68 million. 2020, 204 million, even though it only grew... it grew 27% in 2020 in revenue. Okay, let's have a look at the margins. Gross profit margin. Ooh, 20... Let's have a look at quarterly gross margins. Okay, 30% gross margins. That's pretty good. Let's have a look at net profit. Net profit margin about 8%. Good for a retail business. That's not bad. But it still doesn't explain this massive EBITDA jump in 2020. Still, it is showing, let's get it out of quarterly. Still, it is showing that over the years, it can grow its profit margin. Right, now I see it. So it's usually got a 22% profit margin, and it managed to extend that probably by pricing power in 2020 to 25%. Interesting that it had low gross profit margins in 2018 and 2019, and severely unprofitable in 2018 and 19. So that would be very interesting to see what happened there in 18 and 19. Onto the balance sheet, let's see the debt total, and in 2020 its debt decreased, so it's obviously paid off a lot of debt, and it's only a 330 million debt in total. That sounds pretty good. And free cash flow, well, there you go, 160 million in free cash flow. You can see how 2020 did them really good. In 2021, free cash flow has been quite a bit smaller, to be honest with you, a lot smaller than 2020. And in 2020, as you would expect, a massive return on invested capital of 13.96. Now, that has been an interesting look into Corsair Gaming to see this lovely revenue growth, and probably still going to grow above 2019 next year as well. But it has this kind of cyclicality within its earnings, where you might want to buy this company where it's kind of on a bad year, where it's on a year in between those gaming cycles, that sort of thing. But similar to ASOS the other week, Corsair is starting to look one of those high-flying growth companies that's starting to look like a really good value play. It's quite a popular stock. It's been pushed by a lot of YouTubers in the last year. And to be honest with you, when I looked at it previously, probably 9 months ago, something like that, it did not look like a good stock to buy. But now it's starting to look like it's got a bit of free cash flow on its hand. That's this year's free cash flow. It's showing here that it's got a free cash flow of 50. That's something Fastgraphs doesn't. We just take off this year, I think. So if I just take off this year, and then we start to get a price to free cash flow of 15 right here. But analysts going forward seem to think it's going to have similar free cash flow levels going forward in the next 2 years. And Corsair's a growth stock. It's quite a young company. It's in a very exciting part of the market, with gaming, the metaverse, all of that. Its hardware is going to be needed in the future, and it's probably going to be quite an expensive premium brand. So let's take a look at analyst estimates. I'm going to take analyst estimates. We can take its normal growth of looking about 5% a year. I think that's what Motley Fool said as well. It was going to be around 5% growth a year. But we'll take the analyst estimates as they're factoring quite a low year this year, which is, a very good idea. And at the moment, you've got Corsair that is trading at about a price to free cash flow of 15, which is a pretty amazing place for a young company to be at. It's better than those other young companies that are producing absolutely no cash whatsoever. And because it's a growing company, I'd more than happily give it a price to free cash flow of 20 in a couple of years. And with those calculations, with maybe a possible free cash flow expansion of around 5, we can see that Corsair delivers you a 7.61 annualized return going forward to 2026. And now this is all estimates, obviously. It's based on analyst estimates as well. But to me, this is not ringing the bells just yet to say that we're going to get a 10% annualized return going forward. That whole margin of safety concept just isn't quite there yet, but it's close. If we got back down to $22, we'd start to have a look at that 10% annualized return. But I am putting in quite generous numbers here at 20 times free cash flow, especially as it's right now trading at 15 times free cash flow. At $20, it does get more appealing, but I still don't know for sure. It isn't shouting huge screaming buy at me, but it is a company in a very high growth sector. It is a little bit unloved right now. It could overcorrect to the downside. That's what I would kind of wait for. There's also low debt. That makes it a little bit less risky. And I'm just going to have a quick look today. The date is the 19th of October today, and it is slightly up, $24.95. So it's on that $25 mark, which was quite good, but I kind of still want to see it a little bit lower. Having a look at the trends, it's still on a big major downturn. There's not a ton of volume going through it at the moment. And obviously with that guidance warning, it's likely to have a bit of a hard time through earnings. So ultimately, Corsair is a great company. It's got great revenue growth. It's going to be one of those companies that you might want to just have a look at. It may even be a good idea to maybe start buying and slowly accumulating as it does go down. So you're trying to find the bottom on this stock. But this could be one of those stocks where the market is going to overcorrect on this bad news. It's going to go to a lower price than what it's actually worth, and that will be a great time to buy this stock, which is surely going to grow into an amazing industry going forward. Thank you very much for watching, guys, and if you enjoyed this video, please feel free to like, subscribe, and invest.